I think the overall economic environment is much worse than we are led to believe. The numbers that we are fed are disingenuous, and you're beginning to see kind of a market, I think, that's starting a global market, or at least here in the States anyway, an economic market that is starting to turn down. And the Fed has to decide, do we continue to subsidize and stimulate or not? And if they choose not, then I think we're in big trouble.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs. Welcome back to Liberty and Finance for our weekly market update with Miles Franklin Precious Metals CEO Andy Schectman. Andy's joining us this Tuesday, July 27th, 2021. Andy, thanks for coming back on.
Yeah, appreciate it, Dunnigan. Great to see you. Great to hear you again today. Had a little bit of a problem getting back in front of a camera, but next week shouldn't be a problem. But thanks for having me.
Our viewers always appreciate your insights into the precious metals market dynamics, the overall picture of how the whole industry is being impacted by these changing times, and also the weekly specials that we're able to bring through your weekly market updates. If you could first bring us up to date, you've spoken several times with us recently about this misdirection of price action versus accumulation by powerful concentrated interests. Anything else that we haven't focused on recently that has made itself more present in the past week since we last had a check-in with you, either about availability, trends in premiums or supply chains, mints, mining, refining, anything that our viewers need to know about what's going on in the silver and gold market?
Yeah, it's interesting. Availability hasn't gotten that much better at all. In fact, it's pretty much the same as it's been all year, but the premiums have come down. And I think it has a lot to do with a market that is stuck range bound. And, you know, it has not been very exciting in the months of, June and July. And that has, I think, created an opportunity where premiums are as low as they've been in pretty much the past 2 years. And look, it's not something that I would expect to stay in this range for very long, as all it would take would be one event and we shoot premiums right back up again. But for those people that have been biding their time and looking for a way to cost average or an entry point that's more advantageous, honestly, this is probably the best premium environment that I have seen since, for the most part, February 2020.
Yeah, it's interesting because I've definitely seen a reduction in the frequency of client purchases. However, we're starting to see more and more people who've been, as you said, waiting on the sidelines with significant IRA purchases or protecting the funds from a sale of a property, that sort of thing. So in some ways, fewer purchases, but oftentimes larger. And also people who simply have been waiting for either lower spot or lower premiums to make their move.
Yeah, and there's so much counterintuitive action in the market, and a lot of people, I think, are, I was going to say not equipped to deal with it, and I don't really mean it that way. What I mean is that they haven't been around this market long enough to understand the counterintuitive nature, and it's unnerving to a lot of people. The last time we saw the inflation-adjusted interest rate value as low as it is right now, gold was over $2,000, and it should be. I think there's a large concerted effort out there that is trying to paint a picture that, hey, we're out of the recession, it's the shortest in history, everything is great, jump back in the water. Look, the bond market doesn't see inflation as a problem. But I think people look around and realize that maybe they're not really being told the whole picture, and they're blaming inflationary trends on the wrong things. They're pointing to supply chain problems and energy problems. But I think in general the effort by the powers that be to keep the price of gold and silver down, to keep interest rates down, to stabilize the bond market, to create the wealth effect. I mean, they are, I think, doing all they can to keep this environment in check. And during the summer months, normally during the summer months, people are out enjoying being outside. For all the years I've done this, the summer months are always the quietest. And when you add to the fact that people have been locked up for so long, I think there's an environment out there where people just want to get away. And this has given the powers that be the ability to push things around a little bit more than normal and to create a perception of reality that, as far as I'm concerned, has rendered the best buying opportunity price-wise in gold and silver that we've seen in almost 2 years. So I guess I would say nothing's changed. In fact, the numbers as I see them and the environment as I see it seems to be getting worse, yet we're being told the opposite. And when you see prices conform to a narrative that is being fed to us, it is disheartening to some. It is enough for some to move in other directions. And for the smart investor, in my opinion, I think they realize that we are not being given the full scoop, and that premiums like this and prices like this are a subsidy. And if you're looking to add product to your portfolio, there's never really been a better time done again in 2 years. So it's an interesting time, but it's one where you have to trust your gut, and you have to not look at the price and the conventional wisdom or the narrative that goes along with it. Nothing has changed, and quite frankly, I think, come fall, people will realize real quick that indeed nothing really has changed, and this is, I think, will prove to be as good of an opportunity to add to your position as maybe we'll see all year, as typically things start to pick up right around Labor Day, at least they have for the past 30 years. You can almost throw a dart at Labor Day and know that prices and activity pick up. So use this downtime, use this pullback in premium and this range-bound price to cost average and to get a little greater exposure to gold and silver and mitigate your exposure to a dollar that, is being eviscerated in terms of its value every single day.
When a few minutes ago you mentioned the environment is worse than people think, you're talking about the overall economic environment?
I do believe so. I think the overall economic environment is much worse than we are led to believe. And the numbers that we are fed are disingenuous. And I, quite frankly, think that, look, you're starting to see evictions. You're starting to see foreclosures. You're starting to see talk of no more CARES $600 payments. And you're beginning to see what I think will be the rubber's going to have to meet the road. Either the Fed is going to have to continue to print and the government is going to have to continue to give subsidies. And maybe this is why we're hearing that they want to require masks to be worn again and talking about locking down again because of this Delta variant. And, they're going to have to decide what to do because people are running out of money. Those people who have been paid to be unproductive, well, they're running out of money. So either they're going to have to get up and do something about it, which probably won't happen, or you're going to see more stimulus. And so I just think that so much of the environment that we've seen, this great expansion in equity prices and bond prices and cryptocurrencies and real estate, look, last month was a massive turndown in new house purchases. And so you're beginning to see kind of a market, I think, that's starting a global market, or at least here in the States anyway, an economic market that is starting to turn down. And the Fed has to decide, do we continue to subsidize and stimulate or not? And if they choose not, then I think we're in big trouble, as, all of these valuations have been levied by tremendous amount of money sloshing around in the system, huge amount of money. And if that starts to slow down, and prices are already jacked up very high, I think you're going to see some major turndown in both the stock market, in the real estate market. And, I keep saying every single week, who the heck is dumb enough to be buying these treasuries earning just over 1% with transitory inflation running at over 5% and 13.5%, as John Williams says. So, we're running into a situation where the rubber's going to meet the road here very soon. And I think that we will see a government that will continue to paper things over rather than let it collapse. And it's only going to exacerbate the problem, and it's only going to make the final correction worse, because the numbers coming out right now are not real good. And so, it's either going to get real bad or the government is going to try to kick the can further down the road. But ultimately it leads to a place where interest rates rise, where overvaluations and price discovery correct, and Mother Nature has to cleanse the system. And, the question is, are we almost there, or do they continue this game? And I would argue that the market forces are saying we're almost there. The question is, what's the Fed's reaction? With the FOMC meeting coming up here, we might get a little bit of a better inclination, but my guess is that you won't see one Fed governor vote to taper or to stop buying the mortgage-backed securities and or the treasuries. In fact, I think they'll probably exacerbate it. Point I'm getting at is that so much of what we're seeing is very much an illusion in terms of said recovery. And I think the overall market conditions underneath the stimulus are much worse than we are being led to believe.
It's interesting because one of the money managers whom we interview, Michael Pinto from Pinto Portfolio Strategies, talks about his expectation that we'll see this monetary and fiscal cliff coming in the second half of the year here. And this is part of what you're talking about, is the stimulus withdrawal from a lot of these programs that have kept things artificially inflated. That artificial inflation has not been lost on ordinary people. So many of the clients that call me are talking to me about, they just are losing confidence in the dollar itself. They can see the destructive policies of the money printing there. I want to call it that, the currency debasement that's been going on. And they know that doesn't play out well for their dollars, their Federal Reserve notes, or credits of those that they have sitting on their bank statements, losing purchasing power every month.
You have to realize that. You have to realize that now, I think. And if you don't realize it, I don't think you're paying close enough attention. I think that things are way, way out of whack. And I was reading a tweet from a guy the other day, and he says, "My secondary home in Silicon Valley is valued at 5 times my earnings, which are in the top 1% income bracket. The lack of affordability partly explains the appearance of people living in camper vans on city streets in recent years." Point of it is that you have valuations that are way out of whack and have been created by the Fed policy, the law of unintended consequences. And you have a lot of people, especially young people, who are going on margin to speculate in things like cryptocurrencies and, in some cases, more traditional investments that are, believing that everything moves straight up. And a lot of that has to do, almost all of it has to do with the intervention and the manipulation of the markets by the Fed in an effort to maintain this illusion of prosperity. But if you look close enough, you can see that it's being held up, and it's being held up like an inverted pyramid. It's going to tip at some point. Michael Pinto is right. And when it does, it's going to be very, very awful. And because this whole mountain of growth has been built upon leverage, and leverage that is artificial through low interest rates and easy money. And the big money has taken all of this easy money at low interest rates and jacked up all of the asset prices. And when they come out of those assets, because the big money, I think, is a little bit more aware of what's happening economically, and I think they will pull out of those assets before the mainstream, and they will move to things like precious metals, because there are very few alternatives. And I think you'll see a spiritual experience to most people in this country, because I can never remember a time where the main investment vehicles in the United States, real estate, stocks, and bonds, are all positively correlated, yet inversely correlated to interest rates, and all at frothy all-time highs. So, and this is all because of the stimulus. And if we take that away and the big money moves out of these overvalued valued assets looking for a safer haven, it's really gonna have, I think, horrible effect for most people in this country, 401ks and IRAs and all of the people on margin are going to, I think, going to have an awful experience. And that's why you need to get in front of this. You need to be proactive, like the big money has been doing for so long. We keep talking about the massive deliveries off of Comex, and the big money uses price as a tool not only to maintain illusions of strength and stability, but also to acquire at subsidized prices. And it's kind of a double-edged sword. So, then again, I try hard to remain objective. And I look around me and I'm frightened. I'm frightened, I think, for the way this country is setting up for something big, and big in a bad way. And so I think buying precious metals now at these really affordable prices, maybe the most affordable they've been in recent memory, is not a bad idea at all. And let's remember, we're not talking about getting wealthy. We're talking about preservation in a period of time where every other asset class I see around me is basically at all-time highs. And in an environment where so much of it has been levered artificially, I think that's a very dangerous game to be playing with the majority of our wealth, our retirement, or what is considered traditional investments, 60-40 allocation of stocks and bonds. When this thing goes, like Michael Pinto says, maybe the second half of the year, it's going to be a very bad experience for a lot of people.
Yeah, one of the things you said a few minutes ago was if the stimulus gets withdrawn, the other argument that people make is that what if the stimulus doesn't get withdrawn? What if they just keep on keeping on, pedal to the metal? And that's where Alistair McLeod, head of research at goldmoney.com, has cautioned us that eventually the ordinary people figure out that you can't destroy the currency and just come out okay, that they're not going to come out okay. They're not going to come out whole, despite the fact that their bank account statement still shows us, the same balance it did last month and so on, when they know that the dollars are just turning into funny money. So it's very volatile times ahead, one way or the other. And unfortunately, and also speaking with Rob Kirby, talking about you don't come up with a happy ending scenario through this. The best you can do is try to figure out how to get hurt the least.
Yeah, well, I agree. And, I always talk about the central banks that are buying metals. Look, the illusion of prosperity, Dunnigan, in this country has been fostered by the grace of our foreign creditors. And I think it's becoming obvious, at least to these large monies centers overseas, that situation in the U.S. is maybe becoming something to worry about. And that's why you see them quietly moving out of dollars and treasuries and into gold and silver. And I think that at some point, like you're saying, whether it starts here first or emanates somewhere else, the world will realize that it's a scam accepting dollars as the world reserve currency. And this is why we own gold and silver. The way that I see it all playing out is ultimately a massive inflation that comes as a result of massive dollar devaluation. And whether it be through, to your point, a Fed that continues to print away the value of the dollar, or maybe equally as likely, the rest of the world saying nuts to the dollars. And maybe it's a BRICS nation that comes up with gold backing behind its currency, as we've talked about before, or any alternative better than one that is completely going full modern monetary theory and destroying the value of the currency. So I see an environment where you see massive inflation ultimately as a result of the dollar devaluation. And whether it starts here or starts offshore, I think the result is the same thing. And this is why I think you see the front running of metals off of COMEX and off of the London Metals Exchange and all the central bank purchases. They're doing it well in front of that ultimate climax, and I don't see really any way around it, to be honest with you.
Andy, I know on our weekly market updates we try to keep it short and tight, and if we could give you a chance to let our people know, our viewers, what you're offering this week from now, Tuesday night, through the next week for the weekly special.
Yeah, absolutely. We're going to continue to offer the 1,000-ounce silver bars for $1.69 per ounce over the spot price. If it goes to any of our Brinks facilities, that would come with 90 days of free storage or free shipping anywhere in the country. And if you're looking to, I think, get a position, the biggest bang for the buck without worrying about high premiums, well, this is probably the way to do it. And especially if you own ETFs, because, look, ETFs, the whole argument is that you're getting an exposure to the price with a low premium or a low VIG. Now, in terms of storage, most of these ETFs maintain somewhere between a 30 and a 50 basis point management fee, which will be right about where we would be on storage at Brinks. So all things being equal, I'd much rather have the physical position than just a price representation of a piece of paper. In terms of something a little bit more flexible, and I always try to get a price that is reflective of something truly special, and we look around and try to make sure we're giving everyone the best price, and that would be today the 2021 Silver Britannia, and from the United Kingdom. They come in boxes of 500 and tubes of 25. You don't have to buy that many, but that's how they are packaged directly from the mint. And we will be selling those all week long at $3.95 over the price of silver per ounce. Both cases, I think, are great approaches. One is more flexible, and certainly one is a little bit more cost-effective. But in the end, both are good choices for your listeners, and I would like to hope as good of a price as anyone will find here in the country right now.
Well, Andy, always, we appreciate that. I want to remind our viewers to register for our free newsletter. Guys, if you go to libertyandfinance.com, just put in your name and your email address, click submit. Once you get a confirming email, you gotta opt in. Once you're in, and you'll start getting every interview linked with a description. And if the guest offers any special resources or that sort of information, you'll have that as well. All of Andy's interviews will be there every single week, including the weekly special, so you won't miss out on that anytime, and it'll come right into your inbox. But you got to sign up for it, and it's free. And we've got over 47,000 YouTube subscribers, and we only have 2,000 so far who have opted in to that free email. So make sure you do libertyandfinance.com. And Andy, as always, on behalf of all of our viewers, all of our subscribers, we're just grateful for your presence here with us for this weekly market update every Tuesday night, 6 p.m. Pacific, 9 p.m. Eastern. Always thank you for that.
I'm so grateful to be here, Dunnigan, and to help any way that I can, and look forward to seeing you next week. You stay well, and have a great day.
Thanks, Andy. Take care. This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.